The press conference after the latest Fed policy meeting was full of questions about
inflation expectations.
Inflation expectations.
Inflation expectations.
Expectations are extremely important to economists and to the Fed, especially about inflation. If some critical mass of the public becomes unanchored from the Fed's long-term goal of low 2% annual inflation, those high expectations can become self-fulfilling. We haven't really seen that since the early 80s, and we do not want to go there again. Fed folks are used to sorting through mixed signals, and right now that is particularly so. Take a look at these measures of consumer inflation expectations, compared with a quantitative model based on bond markets and the opinions of experts. And here is core inflation today. I have been running some data, and here are some takeaways from the new article. First, 1-year consumer inflation expectations do seem curiously high, but so far 5- and 10-year expectations are not flashing the same warning signals. Also, for 30 years, consumers have almost always expected higher inflation than financial markets, and higher inflation than we got. But here is why we might want to look a little harder at consumer expectations in this moment. 1, inflation after the pandemic was an extended and pretty unusual surprise for households and investors, the kind of surprise that we have not seen in 40 years. Confidence is rattled. 2, there is a fire hydrant of news feeding those worries. Big recent example, eggs. Eggs are a tiny portion of household budgets, a drop in the ocean of overall inflation. Food prices generally are tame, and yet the news has been sizzling with stories about egg prices and bird flu. Also in the news, tariffs. Consumers and experts register very different levels of certainty and worry about how tariffs will affect inflation. 3, inflation is a rate, how fast prices are changing. But we know consumers are still reeling from inflation that is already over, the big change in price levels. This chart is so interesting to me. Inflation is a lot slower, but people say they are still just as stressed about rising prices. 4, adding to the stress is the fact that real paychecks after inflation actually fell in the recent past, which is awfully rare. People lost ground and budgets are tighter. And 5, households are feeling the rising cost of interest payments. That is not a part of official inflation, but try telling consumers that car loans and credit cards are not a part of their cost of living. All of this is putting consumers on edge, and they are expecting more inflation in the near term than the professionals and the hard data indicate.